Welcome to the Real Freedom Podcast, where we inspire you to pursue your passion to gain time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. Let's get some real freedom together. All right, welcome everybody to another episode of the Real Freedom Podcast, where we are talking about building wealth through opportunities in real estate, really looking at gaining time and financial freedom. And so we've got a good example today of somebody who has recently retired as a result of building wealth through real estate. So we've got Bronson Hill here. Bronson is the managing member of Bronson Equity and a general partner in over 2,000 multifamily units worth over $200 million. Co-lead in-person multifamily meetup in Pasadena called FIBI Pasadena Multifamily. You're also the host of the Mailbox Money Show. And in addition to that, you've got a couple of books, The Single Best Investment Strategy During or After a Pandemic, as well as How to Use Inflation to Your Advantage. And like I mentioned, you retired July of last year from your day job, and now you're in real estate full time. So just a great example of how getting into real estate can help you build that time and financial freedom. So welcome, Bronson. We're so excited to have you on the show.
Hey, Mike, really excited to be here. I love talking about real estate. It's all about freedom, right? It doesn't matter. I mean, real estate is great, but it's what real estate gives you, what it can provide for you and your family, how it can free your time up and allow you to really not have to do a time for money trade, but where you can actually start receiving passive income, growing your wealth, exponentially over time. And I'm a product of that. So I'm really excited to share with your audience and to be here today.
Why don't you share just a little bit about your background and what sparked you to get into real estate, and then talk about how your career evolved and changed as you started to do more investment deals leading up to now where you can retire from your day job.
Right. So I always wanted to do real estate. I ended up going the route of kind of corporate sales. So I basically became a medical device sales rep. That meant I wore scrubs, went into surgery, consulted with heart surgeons on how to use their devices, but it was really interesting. And I was making really good money. I was making 200 to 250, 250K a year. And, but yet it really wasn't challenging. And a lot of people say, well, it's a first world problem, right? You make too much money, you're not working hard enough. But I always, again, just wanted control over my time. I wanted the ability to grow and to not have to work, right? So what happens if I'm not able to work, if I don't want to work, if I want to travel, and I'm just such an adventure guy, I love traveling. And so I started doing, what I thought everybody should do is basically start buying single families. And so I did that, and I realized I had 4 or 5 single family houses. I realized it was a lot of work, even with a team of people helping me. And so I decided to scale up. And so my next deal was a 225 unit deal in Texas. And people say, well, how'd you go from a single family to
scale,
225?
Single family, 225.
I had 3 heart attacks on the way. No, I'm kidding. No, actually, it was interesting because the process of it, I wanted to do single family and to get 30 single family houses. And I have a cousin who's I just hadn't seen in years, and he's been doing multifamily for 25 years. And he said, well, why don't you do multifamily? It just seems like it'd be easier. And I said, well, I'd love to, but I don't have the money. And so a big block for me, and we have these kind of things that we put in our own way of thinking like, oh, I could never do that, or I could never raise other, money from other people. And now it's been 4 years and I've raised $27 million. It was just like, how has that happened? But I started getting training, I started learning. And so I started this meetup, as you mentioned, in Pasadena, California. And at my first meeting, we promoted the heck out of it. I had a partner. We had 60 people show up. And at the first meeting, a guy I'd never met before says, hey, I'd invest in one of your deals. Now, again, I had never done a deal. I literally had only done single family stuff, but because I was providing value in the space, he said, I'd invest with you. So I got together with him, showed him a sample deal. It was kind of like a fake deal that didn't exist. Just like, here's what a deal would look like.
123 Main Street.
Yep. Yeah, exactly. Here's what it would look like. And he said, yeah, I'd be interested in that. I'd put 100K in that. So I introduced him to a guy from that same meeting that I met who was raising money for a deal. And I just connected the two of them. And so that's how I became a general partner, raised my first 100,000. And it's just been an amazing ride. A lot of this stuff starts small, but once you actually gain experience, you realize it goes from, I can't do that to really, how can I do that? And so again, it's just, we're only limited by our own thinking of what we're able to do and our own desire to learn and our desire to grow. So a product of that, I was able to leave my corporate job about a year ago. I thought about leaving right about when COVID happened, but I decided to hold on, and I'm glad I did. Now my passive income has replaced my living expenses.
Yeah. So what we learned is have one meeting and you raise $100,000 on your first meeting, right? It's just that simple.
Yeah, exactly. My good friend, former partner on some deals, Michael Blanc, He has said this. He calls it the law of the first deal. That it's the idea. And Peter Thiel, who's a kind of a hedge fund or like a tech guy, he says he has this book called Going from Zero to One. So that when you've never started a business, or you've never raised money for a deal, or you've never done a multifamily deal, that's the hardest part, right? They always say like the first million is the hardest, right? Or the first billion is the hardest, right? Whatever you're trying to get as far as your net worth. So the idea of going from I've never done this deal to now I've done a deal, and it shifts. So instead of chasing deals, deals start to come to you, right? The brokers get to know you, that you're a serious player in that area. I know you guys have experienced that in your business as well, Mike. Once you're in an area, you're established, the deals, the flow, the money, it all starts to come to you, and then you become this person of value in the center. But at the beginning, it's like you're trying to push a giant ball up a hill, right? It's really hard, and then when you get to the top of that hill, then things start to roll. So it's really fun.
So how did you go through from raising that first 100? What does that look like? So for somebody who's, maybe they've invested in a couple single family, maybe they've got a couple duplexes, and they're like, you know what, I get it. I want to do something bigger. What does that process look like for them?
So there's really, the qualification really is there's kind of two paths. One is I say actually three paths, but one is you either have time or you have money, or you have neither. And so if you have time, meaning, okay, I've got time, but I don't have money, then you can look down the road of how do I learn about syndication? How do I learn about raising money from other people to be able to do deals? Because people only have so much money. Now, if somebody is in the second category where they have money but they don't have time, maybe they're a physician, maybe someone is a CPA, or they have a business. It's more about trying to get the money that you have working for you. And that's kind of what our audience really are, the Mailbox Money Show. We really focus on helping people reduce taxes, grow their wealth over time, really for the busy professional. Now, the third one is you don't have money or you don't have time. And I was kind of, I think, in the third category where I was making good money, but I didn't really have any savings to kind of like, hey, I'm just going to do a lot of stuff on my own. So what I did is I just hustled. I just said, I'm going to spend my full-time job, or if I had some flexibility. And then I said, I'm just going to hustle to try to learn as much as I can, go to as many meetups, go to as many national conferences, listen to as many podcasts, make offers on as many deals as I can, talk to as many people about real estate. And in the process of just taking massive action, as Tony Robbins says, things become clear. So if you just simply stay back and you don't take any action, the person that just takes action and is willing to make mistakes and is willing to just try all kinds of different things and throw stuff on the wall and see what sticks, that person is going to be wildly successful because they just keep taking action, right? That's really in the process of doing it. That's how we learn. So I think, how someone can do it is go to local meetups. If you're in a metro area, I know you're in Minnesota and Minneapolis, there's some meetups that meet there. A great way too is these national conferences. I probably go to 15 national conferences a year where I travel for them. You meet people that are very serious about real estate. How I went from 100,000 raised to raising, the next 15 million was I went to an event, and I've been kind of following somebody who's a very successful syndicator. And I basically said, hey, how's this element going in your business? And what if we work together to help raise money? And he said, yeah, that sounds great. Let's be partners on this. And so they went from basically having trouble raising $600,000 for a deal to, we raised $15 million together over the next 18 months. I had about 1,000 one-on-one phone calls with investors by really partnering with this really successful person and trying to help their business to grow. So sometimes too, it's not that you have to do it all on your own. It's that maybe you can find a partner or find partners that can help you get there. I didn't do the 225 units on my own and because I didn't have all the experience. I had a team member, this guy who had been doing this for over 10 years. And so you can leverage, other people's experience and try to provide value.
Well, I don't want to gloss over that too, because I think sometimes, like people watching this episode, or maybe they see your bio and they're like, oh, this dude's got 2,000 units, $200 million. How do you get there? Well, like you kind of just glossed over it. You made 1,000 calls. So that was over the course of 18 months was 1,000 calls. So yeah. What does that kind of work out to per day, per week?
Yeah. So it was around, I think it was like 15 to 20 calls a week. And again, this is while I'm working my full-time job. So when I said, if you don't have time, you don't have money, you can hustle. And I figured it would be a year or two of hustle. And sure enough, I 10x my net worth in 18 months. And then I was able to basically cover my living expenses through passive income. So again, in some of these calls were at 6 a.m, some were in the afternoons. I had a job that was a little bit flexible. So I could kind of like, okay, I'm going to take a Tuesday and just, from 7 a.m. until 5 p.m., I'm going to do back to back to back to back calls. And that would happen someday. I go on vacation and come back, just have a million calls. So, again, everybody's situation is different, but I think it really comes from, well, what am I able to do? And really, people that are very successful, they'll need help. And so if we can try to find a way to provide value to them, just in the same way we provide value to investors, it may look different, but it's just trying to help solve a problem, right? So over those 1,000 calls, I learned, how do I serve this person who's, 40 to 70 years old, typically male. They're a high earner and they're trying to figure out how to pay less in taxes and how to retire and how to generate, wealth outside of the stock market, right? So it's all about providing value to who you're trying to help.
Now, is this people that your partner had already had relationships with or already was in some type of database?
Yeah. So my partner at the time, he had a huge database of like 40,000 contacts, and he was helping people how to syndicate, teach them how to syndicate. So it's like, hey, here's how you do this. But I knew from just experience that people followed this guy that were never going to buy apartment building themselves. They were never going to syndicate. They're never going to raise the money. They just had money and they were trying to figure out how to deploy it. And so that's really who I said, hey, let's target this person. And it was very successful. So so that's who I was talking to, was basically people in this network that were following that weren't part of his kind of core that were necessarily going to do it themselves, but we wanted to be more passive.
Now let's take a step back and kind of shift focus here. So you had mentioned about the 225 unit deal, kind of your first big deal. I know a lot of people are curious, like, site selection, their investment criteria. How did you go through that process of identifying where you guys want to invest? What's a typical, property going to look like for you?
Well, there's been some, kind of a journey how that's gone. I think, really, I have a friend, Robert Helms, with the real estate guys, who says, live where you want and invest where the numbers make sense. So I live in Southern California and I don't own any property in California. We own it all. And, it's been in Texas, Florida, Georgia, Alabama, and Arkansas. And it's really been, what are the numbers telling us? Do the numbers make sense? And the things I really look for in a market are, population growth, job growth, and income growth. And then I also look for, is it landlord friendly? So, and also, what are the tax, what are the things going on in that market that make that an attractive market? So we've really shifted from focusing on, Texas and Georgia and other areas to almost exclusively focusing on Jacksonville, Florida. And what I like about Jacksonville, Florida, I feel like it's like the perfect market, at least in my mind, because I'll just give some examples. So we have all those things: population growth, job growth, income growth. Well, why are people moving to Jacksonville, Florida? Well, you can buy a decent house in Jacksonville for $300,000 that, in Southern California might be 1.5 million, or Minnesota might be, 500,000 or 800, whatever that amount would be. People can live in Florida, which they want to live in Florida because of the weather. They also want to live in Florida because there's no state income tax. So if you get retirees that want to move there, they want to live in Florida, it's a little cheaper to live. You get people that are COVID workers that can work remotely, they can live there and have a pretty good life. And it's just, we're seeing so much population growth for those reasons. Also, there's no rent controls. It's very business and landlord friendly. Wages are rising, income's rising. And so, this is the type of area we like. And it's really, we're also buying properties, at least right now at the time of this recording, where it's below replacement costs. So a Class C apartment is going for around 165,000 or so in Jacksonville, versus in Phoenix, that's about 300,000, right? So in Phoenix, it's above replacement costs. I mean, there's still a huge demand in Phoenix, but you can actually build cheaper than you can buy a Class C apartment. So to me, I don't really like that equation. But the fact that, 165,000, maybe it costs 190 or 200,000 to build in Jacksonville. So the fact that you can get it below replacement costs, I think, is really huge as well. And then the rent upside is kind of the final thing, is the stuff that we're buying, rents are, 925, whereas there's a going rate in the 1,200 units we have in Jacksonville is about 1,460 after renovation. So the upside is 50 to 60%. And really that provides what Warren Buffett talks about, is that margin of safety, right? That you're buying something that you have a lot of upside in, that even if, cap rates and interest rates rise, which would decrease valuation, you have this huge upside in the rents, which provides some margin of safety. So that's why we like an area like Jacksonville.
Well, and that's one of the things too, thinking about commercial real estate versus residential real estate or smaller unit investment real estate. If I'm buying a duplex, I'm pulling comps based on, the neighborhood and what that looks like, even up to a fourplex. Now that you're in commercial, you have control over the value of your building based on the rents that you're charging, increasing the value, renovating it, that sort of stuff. So you have a lot more control, and you're not dependent on what's the market around me say the value of my building should be. You get to dictate what that is.
Yeah, I think that's the idea. We talk about appreciation, and I think people say, aren't REITs kind of similar to syndication? And I say, well, no, and that's why I personally don't like Class A large apartments in general, because you're buying brand new stuff that doesn't, it basically is the market, right? You can't really control as much of stuff that we talk about forced appreciation, right? It's not market appreciation; it's forced. It's something we see it in the market. It could change a little bit, but it's there. And the more, kind of what you were saying is the more that we can control in a deal, we can control, the property management, we can control the running the business plan. Obviously, we have to execute on it, but those are a lot of things that we can control. Things we can't control are things like interest rates or things like what's going to happen in that particular market. But the things that we can control, if we feel like it's a good upside, it allows us to do. And you're right, with commercial, there's a lot of efficiencies that we get versus single family or smaller stuff that, we can have on-site maintenance rather than one maintenance guy going to 20 houses and to Home Depot back and forth all day long at $50 an hour. We can hire full-time at a reduced rate that person to do maintenance, or we can have a full-time property manager that's on site all the time. And so just these assets, multifamily, the larger ones, they tend to run much more smoothly and more as a financial asset because they're larger. So most of our stuff is between 150 and 300 units. And it just runs more efficiently, I think, that way.
So as you're assessing a building, what do you, when you're looking at the current management, the current condition, trying to find, maybe if you're going to do updates and renovations, finding contractors, walk through that process of, like you said, executing the business plan?
Yeah, so I think it really comes down to multifamily in general. Somebody who's new to this is it's all about team. So for example, you might say like, oh, I don't have any experience in construction or in acquisitions or whatever. Well, you just need to find a team member that can help you to do that, right? So my strength is really helping to educate people about multifamily deals. I also approach things as a passive investor, and I raise money. I raise capital for deals. I'm a part of the asset management, and I'm involved in the processes of reviewing deals and things like that. But that's not my primary focus, right? So, so as far as team, once you start to develop your team and you get partners, and one of my partners now that we've done 1,500 units in, or we're getting ready to close on another one, 1,500 units in Jacksonville. He basically has 28 years of experience and over 13,000 units, right? So it never really comes up of, hey, well, what's your experience in managing multifamily assets? Well, it's not my experience; it's my partner's experience, right? That's how I get around that. The other thing too is when you're looking at a particular property, if you have a relationship with a property manager, that's very helpful. So again, of the 1,200 units we've closed on, and the few hundred more that we're about to close on in Jacksonville, we have a great property manager that we know they're going to be able to execute the business plan because they've done it before. Now, is that 100% sure thing? Well, no, nothing's ever 100% sure, but we've got a good team member there that can help with that. They can help with the renovations, whether we do them in-house with that team or we decide to have a third-party construction group come in and do it. And that just kind of is what makes more sense for this project. So, but a lot of it comes from experience. There's trial and error. And of course, even then, if you have to hire a new contractor or a new property manager, that's where your diligence is really important, right? Making sure that you're asking really good questions. Hey, what's your experience with this particular type of asset? What has gone wrong with this type of asset? What's the biggest risk that you see, Mr. Property Manager, with this particular business plan or this particular asset? And then the more you have those conversations, you'll kind of see who actually knows what they're talking about and who's really BSing it. And then as you get some experience working with them, you'll be able to see, was this a good decision or is it time to switch to move to somebody else? And we've switched property managers before, and it's not fun, but you do it because you really want to make sure that the business plan is achieved, right?
And how long typically does a deal go between, hey, this is the first that this deal ran across my desk to we're closing on the property? What's the length of time there on some of those larger deals?
It really varies. We've had some that we lose, especially when it was really competitive. It's honestly a little less competitive now because there's still a standoff between buyers and sellers, of sellers wanting a really good price and buyers saying, hey, we need something that we need to pay a little bit less. But there's a while where there's 20 or 30 offers on the table and we lose the deal, right? We don't get the deal, but then it comes back 3-4 months later as, hey, these guys weren't able to close, or hey, they wanted to retrade or they got unreasonable. Do you guys want it? And so, that will happen. It just, every situation is different. We have a special relationship with a seller in Jacksonville where they're selling quite a bit of their stuff and we're buying a lot of their stuff. And to be honest, their property manager has been a very mom and pop property manager that has not raised things to market. They've just kind of been a maintenance thing that, the group has done well over the last 5-10 years, but we see so much more upside than what's there. So I would say in general, from the time we get a property we're looking at, it usually might take a few weeks or a month to kind of go back and forth with the purchase and sales agreement, get that signed. And then from there, we'll try to close within a couple months. So typically within a few months, we'll have a new deal and we'll try to close it. Sometimes it might take a month longer or so, but in general, within a few months.
Looking at, a couple of the books that you've put out here, right? So single best investment strategy during or after a pandemic and how to use inflation to your advantage. Talk about some of the kind of the key concepts that you want to get across with people or educate people on as they're thinking about this as a potential investment vehicle.
Right. So I just finished the inflation, how to use inflation to your advantage, that ebook. It's about 50 pages. You can get that at my website, bronsonequity.com, as well as the single best investing strategy during and after a pandemic. How to take advantage of inflation. That's just talking about the new inflationary environment, kind of the different things of what do I do? Do I hold cash? I'm losing, 8 to 15% per year. Like, what are the choices out there? What do I do with it? And talking about just some of the different options between just, precious metals, real estate, multifamily, all kinds of different things. So that one's interesting and really relevant today. The single best investment strategy, that one's more about multifamily, and why I really think multifamily it's kind of like the gateway drug to all passive investing, right? It's kind of the thing people get started with where, there's some reason why they're hooked into it. People that are well-paid professionals, their biggest thing typically is generating consistent cash flow or reducing taxes. So if you can find a way, a lot of people that a lot of physicians that I worked with, they're paying 50% or more in taxes, which is crazy. And there is a way for people to potentially reduce their taxes or defer them, and sometimes even potentially reduce them to zero. The last few years of working my consulting job, I was able to reduce my taxes to almost zero. It was about 1%, and I saved about $150,000 in taxes I would have paid. So that's something that I love kind of talking with people. Now, I'm a consultant on that. I'm not a CPA, so I'm not giving any specific advice, but I think really that's a big one, because if you can just keep more of what you have, you can generate more wealth that way, or just defer taxes. So that's one benefit. And then, of course, tying in with inflation, having an inflation hedge, right? Just something that actually keeps pace with inflation. And if you look at rents for housing, and over a long period of time, it typically keeps pace with inflation. So that's something that I really try to encourage people to look at is, hey, it doesn't matter what, if you're getting a 5 or 6 or 8% return, if inflation is 15%, you're actually having a net loss. You're actually losing money in real terms. And if you're just holding cash or you're having it in the stock market, you could also be just losing money by having money sitting there, versus rents and multifamily, it generally keeps pace with inflation.
Yeah. I mean, there's so many ancillary benefits, right? You've got the rent coming in, you've got the loan balance going down, you've got the appreciation, you've got the tax advantages. And so as the market changes, there's so many different ways that you can benefit from it, versus, like you said, just holding cash, or I'm putting cash in some short-term asset with a fixed return. It's different. Here you've diversified the opportunity.
Exactly. Yeah, that's it. And that's, I think, people, we really haven't, I was born in 1980, and really it's been since 1980 since we've really had significant inflation. And so people just don't realize, there's, like you were talking about, both ends of it is, one is you're getting debt at a reasonable rate. We're still, at the time of this recording, 4.5% is really what we're getting for multifamily debt, and inflation is 8 to 15%. And so, you're getting a lower rate. You're getting almost free money. You're getting money cheaper than what money really costs. And then you're paying it off in the future with dollars that are worth less because they keep inflating. So it's something that, again, we have to kind of get our minds around it. That it can look very different than what it used to look like, but it is very similar to the late 70s, early 80s, where, just holding cash and being sometimes in other assets. I even think like the stock market, which as rates go up, typically the stock market goes down. It's not for sure that will happen, but that could happen.
What does kind of a typical day or typical week look like for you now that you're out of your job and you're full-time in real estate?
Yeah. So, I sleep in till noon. I can get a Mai Tai and sit by the pool, and I
Do a podcast a day and you're good. You're out the door. And
I've had people say, what do you do all day? You just sit around and do something. It's like, there's a joke. There's a saying that you can go from working 40 hours for someone else to working 60 plus hours for yourself. And I think it could be true. It's just, there's so many, I'm really passionate about what I do, but I work really hard. And so it's, it can be through podcasts, it can be through creating, content and information. We have a YouTube channel. We put out about 10 videos a month, and, going to look at properties, going to conferences, educating myself, and then having calls with investors. I still love connecting individually with investors, trying to help, provide value any way I can, whether people are active or passive, just trying to help people get to the next step. So, every day looks a little different. I do quite a bit of traveling, both for fun. I'm going to Chile later this year for Patagonia, which is going to be nice. And then I go to a lot of conferences. I go to conferences sometimes I'll speak at conferences, or be on a panel, or I'll just go and try to meet people and try to learn, because, everything is changing very quickly right now. And there's a saying, I'm probably going to butcher it, but it says there are, years where nothing happens, or there's something like there are decades where nothing happens, and then there are weeks where decades happen. And so where some of those things, if you're really paying attention to the macroeconomics, they're really happening now. I mean, all the stuff that's happening with the money printing and some of the different things that's being talked about, there's a lot of changes that have happened in the last couple of years that it's really important to pay attention.
And where do you see the future going for you? So you mentioned Jacksonville's kind of a hot spot. What would you see, kind of coming out as you're adding more and more units, as your company's growing? What else are you looking to do?
Yeah, so it's a good question. Right now, Jacksonville makes a lot of sense for us. Again, it may not make sense in a year or two, but right now it does. And so again, live where you want, invest where the numbers make sense. The other thing too is, I say, even more than real estate or even more than multifamily is I think it's important to look at what are your goals and what are you looking for the asset to do for you. We actually also partner with the 5th largest operator of ATM machines in the country. And basically we have a fund where it's really high cash flow, and it's a very unique investment, involves no leverage. There's no interest rate risk, and it's 100% depreciation. So we started doing that for accredited investors. That's another thing we're working on. And then we're looking at some other alternative things just outside of this. So I want to do more writing. I want to provide more value to people and just really help people on their journey. I think people are looking to become financially free, and the tools of Wall Street and Main Street don't help people to get there. I call myself a recovering investment advisor because I just looked at, there's all these hidden fees, and the average, person that has a money guy or a money person, typically when you look at all the fees and they take 2% on top of everything, so it's typically about 4 to 6% just in fees. And the average returns of the stock market's about 7 to 9% per year if you include the down years. So most of people's money, and this is trillions of dollars, is going to, fees. And so I just think people are really interested in finding a different way to grow wealth outside of Wall Street. So that's really my passion, is helping, people to learn, because until I learn about, this world that's there, it seemed totally foreign. But then when you get outside of kind of the Main Street way of thinking, it's amazing what doors can open.
Awesome. Well, it's been quite the journey for you. Exciting to see, how it goes from a couple of single family homes to all of a sudden now you've accumulated all these assets, which is awesome. And the value of great partnerships, working with great people. Obviously you couldn't have done it yourself. So yeah, it's an awesome story. So if people want to learn more about you, what can they do? What are some good next steps?
Yeah, so like I mentioned, I love connecting with people, and we also have our investment club that will find investors who would like to join and hear about upcoming deals. I have those 2 resources. I have them on my website at bronsonequity.com. You can just go under there on the learning tab, and there's also a bunch of videos and blogs and different information about all sorts of different topics. But this has been great, Mike. I really appreciate you having me on, and it's great talking with you. I can tell you're adding a lot of value to people and really trying to help people on their journey. And it's been fun to see your journey as well. I'm excited to see where you head in the near future here too.
Awesome. Well, thank you so much. And yeah, reach out to Bronson, grab the book. Definitely a great story. And what always intrigues me is people in real estate don't get started with investing because they're too scared, they're too nervous, they don't feel like they know enough. And then you've got people like yourself, like you're coming from outside the industry and you just jump right in and get it done. And so I think whether you're listening to this podcast in real estate or out of real estate, just a great example of what's possible when you just dive in, put in the work, and build great relationships. So thanks so much for coming on. I appreciate it.